I would like to thank Southern Finance Omni-Media Corp for the invitation to speak again at the Southern International Forum of Finance and Economics. It's also a great honour to be sharing the floor today, albeit virtually, with such an esteemed panel of industry leaders. London Stock Exchange Group is a global financial markets infrastructure and data provider with a truly global footprint, multi-asset capabilities, market-leading data and analytics, and a long track record of partnering with its customers. While the London Stock Exchange is an important part of our organisation's history and our business today, LSEG is now much more than an exchange and brings together a much wider offering to global financial markets. We are one of the world's leading providers of financial data and analytics. Our real-time market data enables up to 176 billion market messages from over 150,000 data sources to get to where they need to be every day. Our post-trade business, LCH, based in London and Paris, operates leading multinational clearinghouses. It offers clearing services for a diverse range of assets, including fixed income, equities, foreign exchange, and interest rate and credit default swaps. As our business has grown in depth and breadth, so has our focus on Asia. More than half of our 25,000 colleagues are based in the region, over 1,000 of whom are in China, and parts of LSEG have been working in China for more than 160 years. As our business looks to the future, we continue to see incredible opportunities in China. I'm particularly impressed by the scope and scale of the projects and initiatives now underway in the core cities of China's Greater Bay Area, Guangzhou, Shenzhen, Hong Kong, and Macau. It's exciting to be part of this discussion as the Greater Bay Area progresses in implementing new policies to foster innovation in products and services. As we can see very clearly by the high level of engagement from our counterparts at the Shenzhen Stock Exchange, this level of dynamic transformation, this move to high quality and high value added growth, needs the active participation of capital market stakeholders. As the region sets its aim on becoming a new engine for growth and innovation and sets standards in many advanced industries such as 6G, AI, fintech, smart cities, robotics, biotech, and ESG, it will be necessary to mobilize large amounts of capital. At the same time, the continued development of clear benchmarks and exchange-based products will help to ensure that capital is directed efficiently towards the industry leaders of the future. At the London Stock Exchange, we understand the responsibilities and challenges faced by the Shenzhen Stock Exchange. As global financial centres like the Greater Bay Area go through a rapid phase of growth, they need to be assured of reliable access to long-term capital. The Shenzhen Stock Exchange has certainly played a key role in facilitating the flow of capital via IPOs on its main board platform and also via Chi-Next, providing the GBA with a ready-made linchpin to support their ambitious and comprehensive period of innovative growth. The London Stock Exchange has played a similar role from its headquarters in London. Even against the backdrop of continued global supply chain disruptions in 2021, for example, the LSE has continued to be that trusted platform for raising capital, helping companies to attract $23 billion in IPOs, with almost 40% of that for tech and tech-enabled companies. We're proud of the role we've played in helping to fund today's leaders in innovation across a range of segments, including biotech, fintech, new materials, and precision measurement, to name but a few. FTSE 250 company Oxford Instruments is a great example of this. Spun out of Oxford University in the 1960s, the company, which makes products that image, analyse and manipulate materials at the molecular level, has an active presence in the Chinese market, with sales to many of China's largest scientific institutions. The London Stock Exchange itself is committed to providing the highest level of service to its capital market stakeholders, investing in innovative new financial platforms and products. This includes our investment in Primary Bid in 2020 and Flow in March of this year. The strategic investment and long-term partnership with Flow, a platform that connects investors with private companies, enables us to support private companies to find the capital they need to grow and positions us to drive innovation in trading and post-trade activities. Together with Flow, we're building a global network of private companies and investors who will have scalable solutions at their disposal to support capital raising and liquidity for their company shares. The investment in Flow, but also the investment in Primary Bid, a technology platform which ensures that retail investors have access at the same time and at the same price as institutional investors to IPOs and further raises, are part of our strategy to innovate and modernise capital markets, opening them up to retail investors as well as further building our presence in the private markets. The third innovation I'd like to talk about today brings us back to the Greater Bay Area and China. The Connect GDR and CDR framework was first proposed in 2015 to bridge the UK and Chinese capital markets. It launched in 2019 on the back of joint work and market consultation involving the Shanghai Stock Exchange and the London Stock Exchange, the regulators of both countries, as well as UK and Chinese financial intermediaries. This year there was a significant development as the Connect mechanism was expanded to include the Shenzhen Stock Exchange. Following the expansion of Connect, there's now an opportunity to connect the GBA and the UK in new and exciting ways. Not only will Shenzhen Stock Exchange listed companies which meet the minimum listing criteria for Connect be able to undertake GDR placements in London, but qualified London-listed issuers will be able to list CDRs and raise capital on the Shenzhen Stock Exchange. Shenzhen Stock Exchange listed issuers are now able to raise capital under the same framework that has allowed 5 Shanghai Stock Exchange issuers to raise over $6.5 billion in the last 3 years, as well as showcase their sustainability credentials, with 3 of those 5 receiving the LSE's Green Economy mark, recognising their green revenues. For many of the GBA's fast-growing companies, particularly those in the technology sector, there is a great opportunity for global growth through overseas partnerships, projects, and acquisitions. And having access to capital in overseas markets will help greatly in allowing them to execute those global expansion strategies. At the same time, we see a future where UK companies with extensive operations in China, be that manufacturing, sales, or R&D, will also look to use the new framework and list CDRs, raising capital in the local Chinese market. Today, as I mentioned earlier, there are innovative UK technology companies that have been operating for years in the Chinese market and are committed to growing their presence. Many of these companies will likely have been attracted to the GBA by the investments made in infrastructure and rules to facilitate international cooperation. The CDR will present these companies with an attractive option to deepen their ties to the local capital markets to complement their existing business networks. LSEG has other strong links to the GBA through other hubs such as Hong Kong, building on its decades-long presence there, with FTSE Russell pioneering tailor-made indices to allow savers greater choice in their investments through their mandatory provident funds. FTSE Russell are now looking to expand their offering to allow making sustainability choices. We also helped the Hong Kong SAR government raise their longest tenured 30-year green bond at the LSE, which was the first time an Asian government had issued such a long tenured green bond. There is certainly a great opportunity in the area of sustainable finance to enhance the role of the GBA. For example, Shenzhen's Ping An and FTSE Russell recently launched the innovative FTSE Ping An China ESG Index Series. It combined Ping An's proprietary China ESG framework, which covers 4,000 China A-share scores and research, with FTSE Russell's China indices, allowing investors to incorporate unique sustainability-related insights into their investment decisions and portfolios. GBA-based issuers can also highlight their sustainability credentials and tap into the strong demand for Chinese green bond issuance, which has accounted for close to 10% of the $187 billion raised by 380 green and sustainable bonds in London. And noting Guangdong plans to incorporate companies' carbon ledgers into existing credit information platforms, it's clear we share a similar vision for future innovation in this area. Just last week, we saw Foresight Sustainable Forestry Fund become the first fund to use the London Stock Exchange's voluntary carbon market framework, which facilitates funding climate mitigations projects that generate carbon credits. Great opportunities also lie ahead with the Cross-Boundary Wealth Management Connect. This innovative program will certainly encourage innovation in developing unique products. The demand is certainly there. The Greater Bay Area accounts for more than 1/5 of the households with over 10 million renminbi in assets, and investors on either side of the border have expressed great interest in seizing the opportunity. It's clear the Greater Bay Area represents multiple areas of intersection with the international capital markets. The dynamic move to high quality and innovative growth will require cooperation and a partnership with global players. Having the channels and tools to guide those partnerships will help ensure successful implementation of this investment in innovation and technology. Today I've presented just a few examples of existing cross-border platforms and products, the Stock Connect GDR and CDR framework, and sustainable bonds. But as we work together in the coming years, I'm confident that we'll find even more new and innovative ways to cooperate. Thank you.